Is it time to rethink stocks in the near term? Because the narrative has been you're going to have a tough near term, and then maybe you can have a good second half. And we've discussed whether maybe that's backwards because the inflation data is starting to cooperate in a fairly substantial way.
Okay, so the way in which I'm personally invested, obviously, I want this to be a good first half of the year, but I am invested in a way where today I'm underperforming because what is today all about? Today is the revenge of high beta. That's what's going on right now. And it's interesting because if you study the three major indexes, you've got the S&P, and everyone looks at the moving averages, the 50, 100, and 200-day moving averages, okay? They're all kind of bunched on top of each other. They're stepping on each other. You look at the Dow Jones Industrial. Well, the Dow is actually above all of its major moving averages, but it's the NASDAQ. Guess what? The NASDAQ is still below its 50, still below its 100, still below its 200-day. So understand the environment of now. You could have further carry through based on where price is relative to those moving averages for the NASDAQ for a lot of the high beta names. I'm not comfortable right now being in those names. I don't want to be there, but there could be follow through for sure.
You got a dangling earpiece. I do. Why don't you fix that right now? Because if it's distracting to me, I can only imagine what the people at home are
They're
thinking
looking at my gorgeous
right now. It's like flying away on you. So fix that. We'll go to Liz Young. We'll help you out here and take the camera shot off you while you do that. So Liz, Tom Lee. I mean, I couldn't help but acknowledge it. It was like flying all over the place. So Tom Lee today says the first 4 days, right, is strong omen. He said it implies plus 23% gain. By the way, Tom Lee's on overtime today, so we're going to get down and dirty on that prediction for stock. But Stifel today says there's a window as well to get to 4,300 by the second quarter of 2023. What do you make of that? Sharply lower inflation, they say, a Fed rate pause, no official recession. Like I said, that plays into that opening question. Time to rethink the near term?
Look, I think it's possible and probable that inflation comes down pretty well in the first half. It might come down very, very quickly, and the market is going to cheer that. I think the move today, the move on Friday, was really predicated almost solely on the fact that wage growth relaxed. And we got this jobs data on Friday that kept the hope for a soft landing alive. The only thing I would caution people on is that the stock market and wage growth alone does not reset the economic cycle, does not solve all of the problems that we have. The risk of a wage price spiral maybe got reduced for a little while, but that doesn't mean that the risk is gone. And what we're seeing right now, especially in some parts of the labor market, definitely parts of the consumer data, is that economic data is weakening. It's probably going to continue weakening, and we can't have it both ways. If you want inflation to come down, you have to bring demand down. That affects consumer spending. That affects corporate profits. I don't think we've seen the end of the bad news.
Okay. So Steve Weiss, I turn now to you, our resident hater, turned day trader.
Only of you, Scott.
Turn day trader now, because Mr. Negative is actually looking for opportunity, it seems, in this market. You bought the S&P 500, the VOO, this morning. You bought Microsoft on Friday. We'll start there, and then we'll go further than that. But are you rethinking the near term for stocks? You must be in some sense if you did that.
You know, I think that I'm more appropriately categorized, again, with the exception of you, as not being a hater, but being somebody who likes to make money, yet not at the risk of losing money when I don't have to. So sure, you have to take bets, and there's always the chance you're going to lose money. After all, the best investors only right 60% of the time or so. But the market continues to look at single data points, and Liz just put it absolutely perfectly, much more articulate than I could do, as we've seen by both of us talking.
Go ahead.
But I agree with that. So the bull case rather, was always, who doesn't know that rates are going up? So you got to buy the market. Well, who doesn't know that inflation's going down? And when you looked at the numbers on Friday, you saw one positive data point in a sea of negative data points in the current report, which was that you had jobs, more jobs than anticipated. You had a lower unemployment rate, but then you had some revisions, which sort of put me over the edge in addition to the wage number being slightly lower. So I said, look, The market's looking for opportunities to go up. It's still a trader's market. Part of my portfolio is long term, but I'm also, I can trade. So Microsoft, as I look at it, Microsoft in these environments trades higher when things like this happen. When the market goes there, it goes to the big cap tech, it goes to reliable brand names.